Good morning. Welcome to Market Wake Up. My name is Jordan. This is John, and you're in the one-stop shop to get to know the real reason the markets move. I'm going to change it up on you, John. I hope you're all having a fantastic day. It's a big week. It's what I like to call PMI week because we've got so much PMI data coming out of various different economies, but also there's a big one. It's Fed rate cut, FOMC week as well. So we're going to dive into it. We're going to give you some actionable trade ideas, going to give you a breakdown on price charts and get you up to know with everything that's been happening in the markets. Stay tuned. Say good day. Tell us where you're tuning in from. Let's get into the Market Wake Up. It's good to be back, John. It's good to be back.
I've been rusty there, Joe.
I was playing jumping in because we don't stream every day now. I'm jumping in. I'm like, what buttons am I pressing here? I've been writing and filming videos. That's literally it's a new world for me, John. But how are you doing?
Yeah, I'm doing really good. It's funny you said actually. I was doing the notes for the show this morning, and I was like, what's the second segment of the show called? I actually forgot. I was like, oh my God, it's freshly squeezed. I've got to get some notes down for that. And I was like, I couldn't actually believe it. You know what? I do miss the old morning stream, but I've been enjoying making those videos. There's a couple of interesting ones we've got planned for the end of the year. So I'm hoping everyone will enjoy those and hope everybody's enjoying that content so far because we're putting a lot of effort into it. So, but other than that, I'm good. It's nice and cold in the UK, which is fantastic. You know, you've been talking to me about how hot it is over there, which I'm still very jealous about. But yeah, having to wrap up very, very warm here these days. Coats, jumpers, the heating's on all the time, which is great. So all I can hear is the money trickling away every time I hear the boiler go off. So
coming out of the bag with the gas bill.
Yeah, that's it. So yeah, it's I'm all right. How are you?
Yeah, good. Well, apparently better than that. No, I got the same problem. It's the aircon's on, not the heating. But aircon's electricity a little bit cheaper. But no, things. I'm doing well. It's been a busy year. We're kind of getting to the end now, where everyone's kind of sloping through again, and the markets are showing that too. Everyone's just kind of like, hey, I'm just going to put money in a safe spot. We're just going to sit here for a couple of weeks and then we'll reassess. And I've got something to challenge that a little bit today to maybe catch those people who are doing that off guard. A little bit actionable, a little sprinkle of drama maybe in the big bite today. But no, I've been doing well. I haven't had any exposure to the market this week. Well, sorry, last week, since our last stream, I haven't had any exposure and I am getting severe PTSD. This kind of end of 2024 has arguably been one of the most illiquid times in my trading account. Like it's one of the least amount of activity happening in the past 8 years of my trading career. I'd argue this last 6 months has been the least amount of activity, and I'm hating it. Now, I'm still outperforming. I'm still up for the year, and I'm on track to have a great year, right? So I'm in no right to be going, you shouldn't be in a trade just for the sake of being in a trade. But I miss it. I need some exposure. I need some skin in the game. I need more.
Yeah, I mean, don't begrudge it too much. You could be like me last week and was up a fair bit and then gave it all back and some. So you can be in two sides of the boat. So I wouldn't begrudge it too much. I think my performance since September really has just been pretty sideways. So I think for me, you know, it's been one of those years. I mean, think of the year that we've had. Oh my God, it's been an absolute chaos year.
We should do a recap.
We should probably do a recap of what's
We should do a timeline of how crazy 2024 was to be a trader.
Yeah, we probably should, because it's just been absolutely manic. Stories left, right, and center. Headline news just creating chaos. Trump coming back in, which was probably a really big one, which we expected, but still, even though we've expected it, there's still been a lot of flows from that. China going, China in the bin, Euro in the bin. I know he's waiting for that. So, it's been a very interesting trading year. Probably, I'd say, it's probably been one of my most difficult trading years. Not necessarily in terms of performance, but just trying to judge things, trying to judge how the market's going to perform. A lot of the times, the moves that I try and play, they have a little bit more of a give in them. So they tend to go a little bit further than they have been going. Like the average moves this year, I feel have been a little lower on my end than what I usually typically see.
It's interesting because
I like to see.
Do you have the data to prove that, or is that a feeling?
That's just a feeling right now. I've got the data. Have I looked at all through the data yet? No.
Okay, because that's one thing I always think about. Like, there's been plenty of time. Like, because I was about to say it's interesting. I feel the same, but I remember 2020. I felt the same, and I looked at my data and I was like, well, actually what I was feeling was completely untrue. Like, I was just like, I don't know why but I have the data to prove that I'm right in feeling that way this year. And I'm interested to know if it's just us in how we're trading, or whether the market has been short-sighted, or whether we are seeing a little bit of a change. And it's always changing, right? But it's always interesting to me to know, am I irrational, or is the market being irrational?
Yeah.
And in the event that we find out who is the problem, how do we fix it? Do we fix it, or is it a time bomb?
That's both
the market and me as a trader.
Yeah, that is a really good question, though, isn't it? I personally think it's the time bomb situation. I personally think that this market is acting a little bit more irrational than most times.
The P to E ratio of equities at the moment.
Ridiculous, right? And there's just this almost energy at the moment that nothing's going to go wrong, everything's going fantastic and whatnot, and that energy scares me. Energy scares me, and it makes me, I don't know whether it makes me a better or worse trader, to be honest, because I feel like sometimes I think I tend to stay out of moves a little bit more, and those moves tend to be the ones where you go, shit, if I just action that as I would have normally, I would have been all right. But you get this kind of, it's human nature, right? You feel this kind of energy, and you feel maybe you get this kind of doubt in your mind about certain situations. So that doubt can kind of creep into the way I trade sometimes, and it leaves me out of certain markets. If
only there was a toolkit to help with self-doubt.
Exactly.
If only. You didn't even mean that, but I've just, as you're going, I'm like, if only there was something that helped traders with self-doubt. Who would have thought? Anyone know where we can find that? But no, I agree. I think it's been a funny one. It's been one for the history books. It's one I'll write down. Let's chat about it. Let's get into the nitty gritty. Last week was an interesting week. It was US dollar strength week, what I like to call it. Don't worry about reading anything else. Just look at what the US dollar did. It bullied its way through the majority of pairs. One in particular, US dollar Japanese yen. If I'm not mistaken, it was 2.86%. I think it closed higher. Bullied its way the US dollar, which is so fascinating to me, knowing that there's a 97.6% chance of a rate cut on Thursday.
Yes, now this is something that I talk about quite often in the world of sort of trading. When you look at the economic calendar and you see real heavy news weeks, the market does tend to lean more towards buying of the US dollar than it does anything else, and that was just another example of that week being that. I was a little surprised. I think we were expecting a cut anyway by the Fed in the December meeting, or this December meeting coming up this week. Was I surprised how the market kind of leaned into the dollar strength as it did? I was a little bit, but then we had obviously the inflation data that came out, which still showing a very sticky inflation in the US, which then prompts this cut into being is this going to be a hawkish cut? The tone of language from the Federal Reserve? Question mark? Yeah. Heavy question mark on that. But yeah, basically what we had was core CPI rose by 0.3% from the previous month. That brings annual core inflation, which rose to 3.3%. I don't know if you saw a lot of the breakdown of the inflation and what was behind it. There was this thing called Eggate, and it was like, it's quite funny, and it's basically saying the cost of eggs had gone up. So basically, food inflation in the US has been a big driver of some of this. So the headline anyway, the headline inflation moves. Yeah, but there was this thing about eggs going up, and everyone was complaining about the price of eggs. I thought that was quite an interesting concept to talk about, because I don't really keep an eye on the price of eggs in the UK. So, but apparently in some shops in the US, it's mega expensive, which is just.
And do you know how cheap chickens are?
Well, exactly, right.
Like chickens are ridiculously cheap. Like I'm 90. Don't quote me on this, but in Australia, I'm 95% sure I can buy a chicken cheaper than I could buy a dozen eggs.
Well, that's kind of mad to think about, isn't it?
I'm confident in my sales ability. If I went to a farmer's market, I reckon I could get a chicken cheaper than a dozen eggs.
Possibly. I'd like to see you go and do that. I'd like to see you go and venture into the chicken farm.
That's the next market wake up video.
There you go. Yeah.
Go to a local farmer's market and buy a chicken.
Yeah. Love it. But yeah, obviously the situation there with the inflation was a sticky one, and this is what's kind of prompted me to think, is the next cut from the Fed going to be a cut where it then comes with some hesitation, especially around the fact that we've got tariffs coming in next year. And it's quite interesting, the tariff story. I don't know if you've seen sort of the situation in the US where Trump is planning all these tariffs, when everyone was kind of panicking of who's going to do. Canada then turned around and went, okay, we'll put tariffs on X, Y, and Z to you. And now I think Trump's going to be like, everyone's now going to play the game of Trump tariff wars against me now. So every time I put a tariff on someone, they're going to add tariff somewhere else. And it's just going to continue to do that. And eventually it'll just cancel everything out, I guess, at some point. But it's just... it's
just what it'll do. It'll just cause inflation, because it's you throw a 50% tariff on a car manufacturer, they're not going to drop. They're not going to drop their prices or keep them the same. They'll just up them by 50%. Now, yes, it'll hurt the sales, but then if they tariff them and they tariff them and they tariff them, and then everyone, and you say they all cancel each other out, well, then the only person that it hurt was the consumer.
Exactly, us.
Inflation.
Yeah, exactly. So...
this is what we spoke about in, I don't know, September, ahead of this, and this plan with the tariffs. It was a real threat of just reigniting this inflation war. And this is probably why Jerome Powell was so opinionistic, and why Trump was saying Jerome Powell needs to be out of office, is because he was alluding to, hey, these plans, if they are fought by opposition, which I find it really hard to believe they won't be, this has the potential to just re-spark inflation like we've never seen it before.
Yeah. And that's the scary thing. That is the really scary thing. This is why I think the market is maybe even trying to price that situation in slightly.
Is it?
Well, I say slightly. I say very slightly, because of the pricing I was saying over in the sort of the bond yield market. When you see 2-year yields, they're closer to the target rate. I guess we're going to be ending up towards, aren't they? So bond yields are in a place where they expect the rates to hold a little bit higher. So yeah, I'm got a feeling that maybe the market, I feel like the market should be pricing this in, should be trying to price this kind of thing in, but it's hard, isn't it? Because they're just thoughts and opinions, ideas. We don't actually have anything concrete yet, because he doesn't step into office until sort of mid to late January. So there's can you really try and price yourself into that as soon as that's happened? Yeah, I'm not certain. One thing that I would be quite concerned with, I think, when I'm looking across sort of US stock markets, is the Russell, the small caps. If rates don't come down and I'd say they hold rates higher, and if inflation sparks again and we see a big move, and I think the small caps will get battered. So I think the Russell could be in a little bit of trouble. But have I looked at that to actually do anything about it? Nope.
Yeah. No, it's an interesting one. Let's jump into Freshly Squeezed and have a talk about what's coming up this week. And then Andre's asked a fantastic question about the Swiss franc, which I'll jump into once we've got kind of ahead of the economic calendar. Now, I'm not going to run you through the prices because you all should know by now where the prices are. It's been a week since we've spoke. And if you don't know the prices, every Monday morning, the Trade Delicious email goes out sending all the up-to-date live prices anyway, so make sure you subscribe to that if you haven't, or the market wake up one. This week we're going to look at a lot of PMI data, including today. We've already had the German manufacturing PMI. You'll be very pleased to know that we once again disappointed, down 42.5, no revision either. The French manufacturing PMI as well, also collapsing down to 41.9. Euro PMI not looking satisfactory. And then we've got the British manufacturing and services PMI coming out a little bit. Not too bad. The forecasts are not too bad. In around that 50 area, the where you want to be. Moving into the US, which is similar, services massively outperforming. We're up in the 55s. We're actually in 56 revised last time, and we're aiming for manufacturing to be in 49.4. So it's in the area where you really want to be. If you can get above 50, even better. That's just today. Then we move into Tuesday, where we've got the unemployment coming out of the UK. On most economic calendars, you'll see it called claimant count change. That's because it's referring to how many people are claiming unemployment benefits. The British also just really like to stand out and be the center of attention, so they don't like to say unemployment. But that's fine. Then we move into the Canadian Canadian world with CPI. Coming through. I'm not really too interested in the Canadian CPI, if I'm honest. I don't care. I don't think, unless it's a massive miss or a massive gain, I don't think it's going to affect much. The situation's pretty stable. I'm looking at it. I'm like, yeah, that's fine. US dollar retail sales coming through then Tuesday afternoon. Moving into Wednesday, we got the British CPI year over year is forecasted to grow to 2.6 from 2.3. That's pretty much it for Wednesday, what you really want to care about. Then we move into Thursday, where we've got FOMC. No. Wrong. That's still Wednesday. The reason I'm doing that is because that's my Thursday.
Your calendar, yeah.
I've just realized looking at that, I'm like, this is in my time zone. So Wednesday is still FOMC, and that comes out. We are forecasted 97.6% chance of a Fed rate cut. Now, the reason I say there's a chance of that, that's what the bond market's pricing. 97.6 is a very, very affirmative. We're going 25 basis points. And that's even why John was mentioning, even with that CPI data, is this going to be a hawkish cut, which I don't think has ever been said before. But we might have a hawkish cut, which is interesting to watch. Then moving into Thursday, we have the Bank of New Zealand. I've just completely lost my calendar here. Yep, we've got the Bank of New Zealand, the GDP coming out of New Zealand, and the Bank of Japan interest rate as well, also expected to remain steady. But then again, it's the Bank of Japan. I have no idea what they're going to do. Then we move into the monetary policy of Britain. Then GDP and unemployment claims out of the US. And guess what? We're still on Thursday. Then we get to Friday. Great British Pound retail sales, Chinese interest rates. Finally, retail sales out of Canada and PCE price index coming out of the US Friday afternoon. If you don't need a bigger week to break up for your holiday at the end of the year, I don't know what it's like. It just took me 5 minutes to read out only the red impact news calendar.
Well, it's just another high impact news week, isn't it? So what do we expect this week? Maybe dollar buying. I don't know.
Previous week.
Yeah, exactly. So yeah, it's really interesting. Another sort of big data drop this week. I mean, I was writing my notes and I got down to my first page and then realized that I hadn't even talked about any interest rate decisions at that point. So I was just kind of like, how have I not even got to that yet? Yeah, it was crazy. It's crazy to see these big announcements coming towards the end of the year when, let's be fair, vols are going to be a lot lower. So I've got a feeling we're probably going to see something big. I've got a feeling. I just want to see something big happen because I just think it'd be be one of those big stories, big headlines for the end of the year. But no, when volumes are pretty light, then it only takes a small amount of something to really ignite some flames somewhere. So yeah, it's going to be some interesting stories this week. You know, there's retail sales that came out of China as well today. They showed that retail sales rose by 3% year on year, slowing down from 4.8%. There's been some big talk now that really China's got to provide some stimulus. We have the rate decision that you've talked about coming on Friday, but I don't think they're expected to cut rates this week. I think they're actually waiting until next year to consider doing any kind of big stimulus in that. But I still feel like that is a
stimulus has been on the cards for the past 8 months.
Wow, maybe even 2 years. You know, so you know that's it's they need to do something though, and I think it's coming to a point where they've not got much room left. It's quite similar to Andre's question when he was talking about the Swiss, and we touched upon this a while ago, that they're likely to cut rates because they want to weaken the Swiss. The Swiss franc is not weakening at the moment. It's still a very strong currency, probably largely due to what's going on across Europe. You know, obviously German manufacturing's come in and it's coming lower. That's no big change for me in that situation. I don't think that would necessarily be a surprise to anybody. So what does that actually change? Nothing. But there is a lot of situations going on politically in Europe, which is really putting pressure on the euro as well. We're in a very unfortunate mix at the moment where you've got sort of political instability putting a lot of pressure on what's going on as well in an economy. So when that happens, you can fundamentals can go out the window slightly in terms of key data can just go out the window slightly. Because if there's political unrest, then the market's going to be focusing on what that unrest looks like. How is that going to stabilize? And there is a German vote of no confidence today for the current party. And if that comes in, I think I've made some notes. Sorry, Olaf Scholz, the Chancellor, if his party is deemed that there is a vote of no confidence within the political party, then there's a chance that he will request to dissolve the party, and that has to take place within 21 days, which then comes into the election that they're having on 23rd of February. So there's a lot of uncertainty, a lot of unrest going on in Europe at the moment, and I think that's why the Swiss franc is being looked at as a little bit of a stronger currency versus the euro. But that being said, Jordan wants to jump in. Go on.
No, keep going, because I've got something to touch on the Swiss franc, but I think we're still on top.
So that being said, the Swiss National Bank is trying to do that, and we've talked about this before, where they could potentially run out of room with their interest rates to try and stimulate what's going. Well, say stimulate. Yes, they need to stimulate, but also to try and weaken the Swiss franc, and that may lead to some kind of intervention.
Intervention. Woo! That's the word I'm looking for. That's the word I'm looking for. The two things. One, Andre, I love the way you've brought this question forward. Because you've not asked what is it that's pushing the strength. You've asked, is there something else that creates demand? Now, there's never one answer to why the market is moving or what's moving it. There's never one. There's one with a large amount of probability, but it's usually a various amount of factors, and you base it probably on that. So you've already come in, you've said, look, Swiss franc, theoretically, looking at fundamentals, looking at interest rates, differentials and yields, theoretically should be weak, right? In order for the Swiss franc to be weak, it means you need to prefer putting your money somewhere else. You got to take your money out of the Swiss franc and put it somewhere else. Where? That's the big question. So it's not necessarily always about what the Swiss franc's doing, but it's about its competitors. You know, you might not want to support a certain football team, right? I don't want to support them. I don't like them. And then you look across the rest of the league and you realize no one can kick a ball 2 feet. Right? Where else do you go? You go, well, this sucks, right? It's kind of that kind of idea. Now, on top of that, what John's pointed to there, that the less room, I reckon they love we need to get an intervention word counter for some of these press conferences, because we know they've said, hey, if we gain too much strength, we're going to intervene to weaken the currency. Hey, if we get too weak, we're going to intervene to strengthen the currency. And everyone's gone, what? So you just want to sit in a range? Is that what we're doing? You're happy with where we're at, and that's what we're going to do? And theoretically, yes, the Swiss National Bank is like, we love where we're priced. Can we keep it here and nice and steady? Now the markets go, no. I don't care. If you like where you're at, it means you know something I don't. I want to be a part of it. Let me buy in. And it creates a little bit of demand. So they've got a real dynamic situation there, which usually for me, when I look at a currency and I can't get a read, if things are pointing that it should be down, or there's really a mixed bag on the weight scale, I'll leave it be. I look for one where 6-7 different things are on one side of the scale. And there might be 1 or 2 positives here, but they're outweighed. The Swiss franc right now for me is kind of in this balancing act. And when I find something in a balancing act, it means I either leave it alone or I pair it against something that's really weak or really strong. But best scenario is leave it alone, go to something that's really weak and fundamentally weak against something that's really strong and fundamentally strong, and you'll find more opportunity and probably better profits, but I can't promise that.
No. That's a good take, though. That's a really good take. So, yeah, but I don't have anything else to add on to that.
There you go. Well, yeah, let's digress. Was there anything else you wanted to touch on this week, up and coming, that we should know about?
No.
Well, that's it. There you go. Your playbook for this week. It's done. Let's get into FOMC. I've been doing some digging for the big bite, and it's a head scratcher. I've literally probably just shot myself in the foot by saying, if you don't know, just leave it alone. And now here I am talking about FOMC. So the reason I'm talking about FOMC today is obviously Thursday. They're going to cut 25 basis points. Yeah. That's not a promise. That's just probability. It looks like they're going to cut 25 basis points. The problem is, do they want to cut 25 basis points, or are they just cutting it because they said they're going to be cutting it and the data is now going, oh, I don't know about that, right? And there's this awkward influx. Now, usually a rate cut would move into weakness for a currency. A rate cut would mean, okay, they need stimulus. It's not going great. Usually into the meeting and post-meeting, you will see some kind of sell-off. The US dollar the past week has been rallying, but not just the past week. In general, the US dollar has been rallying, which makes this rate cut so interesting. We're providing stimulus into an asset which rallying. And it's like, wow, this is fascinating. This is kind of an uncharted territory where we find ourselves. So I thought I'd dive into it. So 25 basis point is very, very likely on Thursday. Okay. Now, why the US dollar is rallying itself is one of those puzzle questions. So you can lean into kind of that uncertainty with Trump coming in January. Look, the safest bet, we're going into holiday season. Let me just get in the US dollar and walk away. All right, we can have a look at kind of the global uncertainties that are happening around the world at the moment. When it is uncertain, where do you want to jump? You want to jump to Big Bertha, the US dollar, and just sitting there. It's pretty safe. You also have a look at where else would you want to invest right now. It's still really not there. So there's a lot kind of pushing the demand for the US dollar. I'm not buying it. I don't like it. All right. But there's 2 scenarios from this rate cut, in my opinion. Okay. One is the expected rate cut. And that's 25 basis points with a hawkish tone. Mm-hmm. That's 25 basis points then going, hey, we've done our part. We're doing jack shit for the next 3 months. Yeah. Right. That's how I see it. Right. That's scenario 1. Scenario 2 is 25 basis points. We're going to continue to cut, which is unexpected, shall we say. And I want to play both of them.
Okay.
Yeah, I've told you, I'm antsy. I've been out of the market. I'm like, okay, right before we break up for the holidays, let's throw some money on the line. What could go wrong? So that's the question. How? Here's the thing: if the Fed does cut 25 basis points and says no more, okay, I do think we'll find a little bit of strength in the US dollar continued.
Yeah, okay.
I think we'll flatline for a little bit, right? Maybe a week, maybe over the Christmas period, but overall into Trump stepping into office, we will see the continued rally. So it's very simple of just playing price levels in that continued rally.
Yeah.
Okay. And I'll point out a couple price levels here in just a moment. But looking at things like US dollar, Japanese yen, euro, US dollar, and even anything really paired against the US dollar, playing those price levels as you go through. Scenario B, which is my favorite, is the one where they cut and they say, hey, we're going to continue to cut. Right. Now, I think it's unlikely, but that's the surprise factor. That's what I want to see. That drops the market. And it drops the market heavy, the US dollar, in my opinion. I think that drops the market quite harsh. And I think with current pricing where it's at, it wouldn't be hard for trend traders to jump on the back of that drop and really push it further. That's the one I'm looking for. Scenario B. Do I think it's probable? No.
Yeah. So you think that could weaken the dollar and then maybe increase equities?
I don't care about equity. Equities are doing their own thing. Honestly, I would be an idiot to try and sit
right? Borrowing becomes less. That means, yeah, okay, we're good to go here. Let's just pile in on equities.
I mean, borrowing became more expensive and the thing rallied to all-time highs. So I think we can take any kind of common sense from the S&P 500 right now, put it in the bin, and just in the bin, honestly, like... I can't make sense of it. Price to earnings at like 32. Historically, it's always sat around like that 16, 15. It's double that, and people are still like, ignore equities. I'm talking currencies. I'm talking currencies today because I can't put my finger on it. But I do think it drops the US dollar. Regardless of where that money goes, I do think it drops the US dollar. And there's a few things I would want to pair it against. Now, arguably the best thing I want to pair it against, I'm only going to share the name, and that is all. Just because I know you've done a really elaborate piece of analysis on it that comes out tomorrow. And I don't want to just say all the same analysis and then your video comes out. So you've cut off my analysis, but nevertheless, there's two scenarios here. So the question I'm asking myself is the US dollar on a rubber band or a bow and arrow? Okay. Is it on a rubber band? And if we do see the cut, but with a hawkish tone, we're going to pull back a little bit and then continue, right? Or is it a bow and arrow, which has been pulled back and this rate cut is going to go bing and send it straight back down? What do I want? Either one. I don't care. I'm going to trade them. Okay. What do I prefer when it comes to volatility? The bow and arrow. Scenario B, absolutely. So let's have a look at some charts. And kind of show you the levels that I would be looking at, but more in particular the sexy things that I want to see. Okay, so this is the US dollar index. Now, what makes this so fascinating is where technically we are priced at the moment. It is a pivotal moment.
It is.
Technical traders will look at this and tell you, oh my God, is it going to break or is it going to reject? Throw in FOMC in there as well. Oh, yeah. Oh, yeah. This is what we like to see. This is what I call all eyes on the chart. And when all eyes are on the chart, it just takes a little bit of volatility to make that little bit of volatility a lot of volatility. Yeah. So if we do get the hawkish tone, I think we break. I think we break the 107.3s and get onward up to the 109s. Yeah. Okay. If we cut 25 and continue to cut into the near future, 104s are my target. I think we'll get to the 104 quicker than we'll get to the 109 in scenario B than scenario A. If you want to pair this on a couple of charts, you'll actually look at, we've got something like the euro US dollar, already very extended into a previous price area where we rejected, which is back in October 2023. This is the 104.4s, 104.5 area. You can see we're already rejecting it plenty of times here. Little bit of fundamental support, won't take much for this to bounce up. A little bit of fundamental non-support. Words aren't my forte today. Resistance. We break this, we're not getting into anything until we get down to until we get down to parity. And with the euro already being in the bin as well, right? There's a weighted opportunity. US dollar Japanese yen is one of such interest because we're back at intervention levels. We are back at Japanese intervention levels, which I never thought I would say so soon, but here we are, the V-bottom retest that we had, and we're right in the center of the zone. So no matter which way we initially move from this, I think fading either one of these zones is going to be a really interesting play. That's 156.5 or 149.1. I think fading any aggressive move into these two areas is going to be a very, very interesting play. Keep in mind, the interest rate decision doesn't come out till Thursday.
Yeah.
That means we've got 3 trading days until this happens. So we've still got plenty of time for it to move. My last one, New Zealand dollar, US dollar. I mean, look at that. We're at the bottom of the range right there. You can see the 57s. The reason I'm not going too much in New Zealand dollar, US dollar is because John's done a piece on it. There is a seasonal play over the holiday period that takes us into January that you do not want to miss. Okay, this involves this to the upside, which must involve US dollar to the downside, which would enforce scenario B. That's why I like it. Nevertheless, there's a bit of an idea. Euro in and around the 106s, below the 104s. US dollar, Japanese yen fading the 156.5s or the 149.1s. New Zealand dollar, there's just one. It's long, but I'm not going to dive into why that's supported. That's John's job tomorrow.
Awesome. I like both of those scenarios. I like both of those. I like all 3 charts, to be honest. Dollar yen one is definitely one that's perking my interest, or piquing my interest, whatever the saying that is. Because we've got a BOJ interest rate decision. There was a really interesting move that occurred last week when there was comments out of the Bank of Japan, Ueda, who said that, yes, we're approaching the point where we could be looking to hike interest rates, and then quickly downplayed it, which saw dollar yen kind of rip lower and then quickly rip back the other way and continue to see the market rally. And that was fascinating to me to see that kind of momentum swing going on in there. I think the BOJ are more likely on a path of hiking rates, but if we do see this dynamic of a hawkish hold by the Fed, I feel like maybe dollar yen could start to become a little bit more range bound. It'd be interesting to see if we creep up towards 156, and maybe even if we breach 156, a lot of the intervention chatter will come back then, and I think that would be an interesting story to look into.
The interventions back in early 2023 was in these 149s, which we're now looking at bottoms. And then the last kind of major one was here, and then we had the Bank of Japan unravel trade that played. But we were playing this, on stream. This is April last year when we were playing these levels, and we're back there now.
Yeah, it's fascinating, isn't it? Absolutely fascinating. And I think dollar yen is definitely a market I'm very much interested in. I was a buyer of the yen, might have been last week or the week prior. I was a buyer of the yen, which worked out really nicely, but since then we haven't really seen any kind of yen strength inflow at all. Yen has weakened considerably, so for me, I do quite like that yen play at the moment, which is something that I'm taking into consideration. Euro, I'm flirting with the euro a little bit. I think that's why some of my performance last week wasn't so good, because I was flirting with a bit of a euro long plays because of the commitment of trader reports. Got a little bit trigger finger on the old euro last week, trying to buy up a couple of those lows, and market just kept steamrolling with the US dollar strength. But we've seen a substantial move in contracts on the COT reports now on the euro. When I take a look at sort of the commercial long positions, they've jumped up to some really significant levels now. So I'm very interested in the euro to do. And let's think about. I just want to kind of think about this a little bit, because yes, euro is in the bin. Like we've talked about this for a while now. It's not a great economy at the moment. There's a lot of political unrest. So, but the fact is now is I feel like that's been pricing in for a little bit. It's also a reason why when euro dollar was up at 112, I was going, how the hell is euro dollar up at 112? Because it just didn't make sense. It's very similar to Andre's comment about the Swiss franc, really. It just didn't make sense. And then when we did get that switch, it did go quite aggressive, which I feel is a very similar position into the Swiss at the moment. But with regards to the euro, I think any kind of positivity is going to be met with some decent buying. Yeah. Anything that they can grab onto, I think, would be the narrative change for them. So I'm not saying it's coming. I'm not saying it's coming now. I'm not saying it's coming next week. But, you know, it's definitely something. It's no longer. Well, it's still in the bin. It's very much still in the bin. But it's almost like it's, you know, when you've done a recipe or you've done your microwave meal and you've accidentally put the sleeve in the bin and you need to know how many minutes you're putting it in and you forgot, and you just open the bin lid slightly and you can just see it there. Just okay, yeah, I can see it's 2 minutes, whatever. That's where the euro is. It's in the bin, but it's just on the top. It's just the sleeve. I can't feel sitting in the top. I can't believe I've done an analogy like that. Anyway, let's go into a take it to go, because it does involve the euro, and I'm looking at potentially euro pound for a potential long idea. Now, yeah, you know. This would be where I would be looking to potentially take some action on the euro. There are a couple of charts that I like that I spoke about last week. One being Euro CAD was another market that I particularly liked. But we're at this significant level of support here. March 2022, we were last back in this area. That is a very significant low that's formed. This is a weekly chart, by the way. If we look at the weekly close, there's a very strong rejection of this area, largely due to some pound weakness coming into the market. Again, we were talking about growth forecasts a few weeks ago in the UK. Not great, with the new Labour market coming in, new Labour Party coming in, new budget in the UK, kind of forcing some companies out of the UK. So growth in the UK, not fantastic right now. GDP last week came in, second month of contraction. So that was something to see, and that has fueled a little bit of a move higher on euro pound. So euro pound rallied. I quite like the idea of potentially looking for a higher low situation here for a potential long. Would I be willing to hold this for weeks and months? No, but I think this could be a market that we see just drive a little bit higher up into some key swing highs. Just could be something to watch for on sort of mid to small time frames for a bit of a move higher.
I like it, guys. That's going to do us for another week. If you haven't, have a look in chat. You can get on our newsletter where we send our best trade ideas and macro gossip all the way through straight to your inbox. We've got a video coming out tomorrow and another video coming out Thursday. We won't be streaming next week as it'll be holiday week, but our videos will still be getting released. So don't worry, you won't miss us. Guys, have a fantastic trading week. Trade safe. It's a hell of a week out there. Stay in touch and we'll see you soon. Cheers.